It's 6:43. You're listening to Breakfast Business with Vincent Wall. Ireland currently has about 800 hotels offering 56,000 bedrooms. It's an industry that's seen significant change of ownership over the past decade, and like a lot of service industries, it's performing much better in some parts of the country than others. Estate agents Savills have just published their latest review of the sector, and Tom Barrett, Head of Hotels and Leisure, joins me now in studio. Tom, you pointed out that last year over €1 billion in hotel transactions, in properties being sold and bought. That's probably the peak, I presume.
Yeah, that's a record, Vincent, and that was a culmination of growth from 2012 in single transactions, developing 13, 14, continuing in 15, but then you had large transactions with Dalata in the market buying Moore and Bewley Group, and Lone Star acquiring the Jury's Inn hotels, of which obviously there were quite a number in Ireland.
Now, do you expect some secondary activity to continue through the current year where people who bought in the last 2 years, perhaps as short-term investments, will trade on again?
A little. The hotel sector is slightly different to the other commercial property areas, though. You have a lot of what I call generational hoteliers. So you've got family hoteliers who have been purchasing, people who have purchased one-off to get into the industry, and then the likes of Dalata who are building, a long-term PLC. So they are retaining assets long-term. Obviously, within a normal sector, there is churn. There are people who are saying trading one asset for another, and there are also people deciding to retire from the industry. And I think in the area of loan sales, of which there were quite a few in 2014 and 15, which would be above and beyond the billion that we recorded, there would be sales out of that. That is where generally a financial institution, a loan acquirer, then trades on some of those properties in due course. But even that area, it's quite a limited retrade.
I presume it's nothing but a positive development that we now have a significant number of branded hotels, particularly in the urban areas, and that there are major groups in there like Dalata PLC, like the likes of Tetrarch as well, building up groups of hotels.
Correct, because you need groups as well. The individual hotelier is obviously the core of the Irish industry and is very, very important to it. But a group also brings power and marketing power. And we found when the last recession came, sometimes we didn't know who our customers were. We relied on the intermediaries, the likes of Expedia, Bookings.com, whereas larger groups, and such as Dalata, would have their own sales and marketing team. You'd have obviously larger hotels in Ireland as well who would do that and travel to the UK, Europe and States and develop relationships with the customer directly. And the international brands did come into Ireland in the early 2000s. Sometimes they were very successful and sometimes unfortunately not. They are starting to come back again, but far more selectively, and I think into locations that are appropriate for the brands.
Now, particularly in urban areas, particularly in the Greater Dublin area, huge tourism input, domestic economy on the rise again, people are going away for weekends, that kind of thing, but also the sector benefiting from a special low VAT rate of 9%. Do you think as the sector recovers strongly in Dublin, and you point out some of the figures, average room rates up to about €111 and growing, that VAT rate is vulnerable perhaps in the urban areas?
I don't think you can take it for granted at all, but certainly it's been very successful for the industry and for the economy and for growing employment and tourism and around the country. But even in Dublin, I would say it's been a recovery until now, and it's 8-10 years getting to that stage. You see very little development of hotels in Dublin. In fact, there'll only be one opening this year in O'Connell Street, 200-bedroomed Holiday Inn Express. You had the Clyde Court closing, so net, nothing new in Dublin. You're starting to see development, but the cranes that are around the city are largely offices and residential so far.
Because the return is better?
Because it's just hasn't been viable to build a hotel. You do actually need that rate. If we look at the comparison to European cities, our occupancy is high, but our average rate remains, in the mid-tier, I would say, and we need to get a little bit higher to justify development.
Finally, those 56,000 bedrooms around the country, not all of them will survive in certain places, I presume, still. The recovery won't come fully, will it?
There were 60,000. It's down to 56. I think the seepage out of the industry is down to a normal level where you might have an old hotel that has another use, but I think it's the ad hoc, one-by-one exit from the industry now.
So it sounds like we're back at a fairly an equilibrium, a fairly sustainable industry now?
I think so, but we've had a few good years. The industry has developed good links with tourism, and the numbers were 8 million in 2015, which was again a record number. But it is the likes of the Wild Atlantic Way, the Ancient East, and bringing people to Ireland. And obviously if you look at the stock markets for the last 3-4 weeks, a bit of volatility, so you can never relax.
Tom Barrett of Savills, thanks indeed for joining us.